Alright, so in today's trade review, we're going to be going over May 21st trading action. I took two trades this day. One was a loss and one was a winner. I think coming up right here, I think you're going to see the first loss that I take on the day. Here looks like okay, right here. So this is the first loss that I took on the day. Let's go back a little bit. So I'm still working off of this 5 minute. Let's pause this. I'm still working off of this 5 minute liquidity sweep on the buy side. And then pretty much what I'm just watching here on the 15-second chart is I'm looking for us to sweep a new internal 15-second buy side level to then get short off of that. So I'm waiting for a double sweep. So I'm waiting for a 5 minute higher time frame and then the 15-second lower time frame. So I think when you saw, I think I was looking at these highs right here. You can see we didn't make a gap. Price then pushed up higher. We swept this level here. We then start to roll down. We created no gaps on the way down on the 15-second chart. We start to move back up. We put in a high here. We move down. We come back up. We take this high. We start moving down, and then we create a gap here. So, like any other day, any other setup, I am taking this trade. So you see I get filled with 5 micros, and unfortunately this trade just goes straight to stop loss. So when that happened, I was just like, okay, like pretty much like, damn, like that was quick. Like, usually I don't have like an instant stop out trades here. So you can see I'm kind of just looking at it, seeing if maybe, I'm gonna take another trade. Fast forward a little bit, you can see I don't take any more trades. And then around here, once I move this, I'm gonna pause it. So same thing, we're still working off of this 5 minute buy side level. And then if you look at the 15-second chart, this was that high wick that I was referring to earlier. And then right here, this is where I took the trade. We push up, we sweep this high, no gap. We sweep this high, no gap. We come up, we fail to take this high, and then we form a gap here. So this is technically bearish SMT, where we don't take this high. Now, this was concerning to me just for the fact that we kind of left equal highs up here. But I was just kind of figuring that either ES or the Dow or the Russell or something had taken this high on its chart. And at the same time too, it was like we got our sweep. Like I'm not just gonna like miss this trade because it looks like it might come back up here and take it. We already got our sweep and we already got our gap. And we have our 5 minute buy side sweep as well. So I set my limits here. 5 micros to sell, of course. Stop is at the high. It's about 7 points. I'm risking $70 on this trade. And then now it's just a waiting time. Now it's just a waiting game of where I just wait. I wait for my setup to trigger. Or I wait for, not so much my setup to trigger at this point, but we're just waiting to see if I get filled or not. And if I get an instant stop out. So there we are, filled. And there's something I've also noticed on my trades is we always seem to inverse the fair value gap that I'm trading off of. Like we always seem to fill it in all the way. So I think moving forward, maybe if I might be able to get better stops and better targets if I set my limit to fill. Like if I get, like, so if I was a short, instead of shorting at the beginning of the gap, I short at the end of the gap, like here. I noticed that that's a pretty similar thing amongst my trades. I'll have to revisit my winning trades, which I can just look back at these live streams and see if that's actually like a good idea. Because so far, I mean, it has been a pretty solid. I mean, just thinking off my knowledge, it does seem to work pretty well. But either way, we're in the trade. We're up 100 bucks so far. I think the risk reward on this trade was, yeah, 4.25. Target is the prior 5 minute candles low, like always. You can see that on the right chart. You can see I have my target at that 5 minute candles low. And like I said, just a waiting game. You know, once I put on a position, there is nothing I can do to make it work in my favor or not make it work in my favor. Doesn't really matter what I mark on the charts. It doesn't matter what new information shows up. Once I'm in the trade, I'm in the trade. You know, I can close out early if I see something I don't like. I can move my trailing stop. But what I've noticed about closing early out of a trade is you just cost yourself profits in the end. Unless you are looking for big swing moves, things like that. Um, that's the only time I would say like maybe you should be closing them before target hits because there might be news. We might actually react to that resistance level that you were looking at, but on a smaller time frame, like if you're working off the 5 minute chart and like a 15-second chart, for me, for example, you're better off just holding. You're better off just letting the market just do what it needs to do. You know, the whole idea, the whole point of the market is to um, so that big banks and stuff like that can get their orders in. So like its whole goal is to manipulate, confuse us retail traders. So, when your trade comes to break even after being, halfway to TP, you know, just see what it does. See if it ends up responding off of it. If it's a good level and if it's a strong level and it's an important level, like it's an important thing that you were trading off of, price should respect it, Now, if you're just randomly buying on a candle or selling on a candle without any really understanding of what's going on or like what the price action's telling you, then yeah, you should probably go to break even. But going to break even too early will kill so many of your trades. You won't even know. You might be like, oh, okay, I avoid a loss, but how many times have you seen a trade come to break even, take you out for, you know, nothing, no loss, no profit, and then go straight to your TP or go straight to your stop loss. If you're trading in a way that I'm trading, if you're trading in a reward over risk strategy, meaning like on this trade, for example, I'm risking 7 points for about 29 points, it looks like. You can take the losses. If you're trading in a one-to-one situation, you can't really take losses because when you make a win or you make a loss, say you lose a trade and then you win a trade, you're break even. So the losses are really important to avoid if you're trading a one-to-one, or even worse if you're trading less than a one-to-one. If you're trading a point 0.5 to 1, where it's like you're risking 10 points but you're targeting 5 points, you have to win two trades to just make up a loss, and that's not really how you want to trade. There are people that do trade like that. But it's really difficult because you have to be right every time you put on a trade. And at the end of the day, the market is gambling to an extent. But we do things, we look at things, and we manage our risk to a point where we aren't gambling so much, but we are taking strategic bets on the marketplace.